This is a particularly dangerous time for the market because we are seeing some signs of a top over here, but of course nothing that scary. And I say this because although the indices are on the verge of a reversal, the main triggers and key points are very clear to us at least, alright? This makes it easier to read, but it doesn't mean that we can rule out caution, alright? So let's analyze calmly and serenely what's happening here in this market. Welcome to the Finance Hydra channel. My name is Nathan, professional trader and creator of the 5% project, which helps ordinary people like you, like me, to make consistent profits in the market and earn some extra income by following our swing trading methodology. You have 7 days free, so you are invited to join the group. The QR code is right here on the left corner of your screen and in the fixed comment below. Now, why is this a particularly moment for the market? Because we are on the verge of a reversal, all right? We see that SPY has been insanely bullish since October last year, making higher highs, higher lows, trading consistently above the 21 EMA, the exponential moving average, which has been acting as a reliable support level for the prices over here. So yes, the trend is clearly bullish. However, if we see a reversal, that would be the first time, the first bearish chart structure in this year. So that would be quite frustrating, that would be quite problematic, but at least the key points are very clear to us, as we can see here. This candlestick, in my humble opinion, guys, this candlestick is our main catalyst. Last Thursday, we saw this massive bearish reaction right under the all-time high area, this blue line over here. So we see a top, one top, two tops, three tops. We see three failed attempts of resuming the bullish sentiment over here. And now we see such bearish reaction. Could this be a triple top? It could. However, on the other hand, this top signal wasn't triggered yet. Maybe it never will because, well, we saw many other very problematic top signals in the past over here, like this one, like this one, like this one over here, like this one over here. Neither of them were triggered, so maybe the market will frustrate another top signal, another possible top signal over here. That's a plausible possibility. But guys, what are the most important key points for us to watch from here? Regarding SPY, $512, that's our main support level. If SPY loses and closes below this key point on the daily chart, then we're gonna probably trigger a bearish reversal chart structure. Not only this triple top chart pattern, but at the same time a bearish pivot point, a crystal clear lower high, lower low. Let me make this path a little bit thicker over here. So as we can see here, that's a possible lower high, lower low. That would be the first bearish chart structure of this year, all right? So we gotta be extremely careful with that. The most important support level, 512. Only by losing and closing above this key point, SPY is gonna trigger a bearish pivot point, suggesting a sharper correction, a sharper pullback. Then SPY is not gonna be a crystal clear buy anymore. And of course, we should rethink our strategies in such scenario, all right? Now, Nathan, what it takes for SPY and the broad market to resume the bullish sentiment? We gotta reject Thursday's bar over here. Only by rejecting this bar, only by breaking this bar's high and closing above this candlestick on the daily chart, which automatically suggests that we should break the all-time high area, only by doing such bullish reaction, I will be convinced that SPY is going to resume the bullish sentiment. And in this scenario, QQQ, which faces a similar challenge over here, all right, we saw a massive bearish candlestick pattern under the all-time high. Unlike SPY, it failed to retest the all-time high area. We are still below. We made this candlestick pattern clearly below the all-time high area, suggesting that it is a little bit weaker than SPY. But the situation is quite the same, all right? Only by losing this candle's low, I believe we're gonna see the materialization of a sharper correction, and only by breaking this candlestick's high, I see QQQ recovering and resuming the bullish sentiment. I say this because, guys, the trend is still clearly bullish, all right? And in this scenario, many stocks among the Magnificent Seven are going to benefit incredibly because Microsoft is still very bullish. We see the shadow, the ghost of a head and shoulders chart pattern, all right? I see that too, all right? But this pattern wasn't triggered yet. Only by losing this candle's low, we're gonna trigger its neckline, suggesting a sharper correction, maybe to the $400 area again. But as long as we stay above our most important key points, the situation will still remain pretty much the same. We are gonna still remain bullish. The only stocks that are actually going up today are NVDA and Meta. Regarding NVIDIA, this reaction is very good because we have been talking about the $841 over here as our major support level, and well, not by coincidence, it is reacting very well right above this critical support level. Only by losing and closing below 841, I see NVIDIA materializing a sharper correction, maybe triggering this possible double top chart pattern, right? It is not the most handsome double top chart pattern that I ever saw in my life, but all right, it is a technically plausible one, all right. Still, only by losing 841. That's our most important key points. Now, Meta is also going up. It is looking very bullish. It is reacting right above its support levels again, above the 21 MA, which by some reason is not appearing over here in this chart. Come on, TradingView. Thank you very much. Now, right above the 21 MA, right above the previous top level over here, right? This is a very good situation for Meta. These companies, NVIDIA and Meta, are the best ones right now to recover, to trigger a bullish reversal chart pattern because they are close their support levels and they are already reacting. I know, although the indices are not reacting, although many other stocks among the Magnificent Seven are not reacting as well, these two companies are looking quite resilient at least. They are unlike Apple, which is, well, right now it is just making another bearish reaction, retesting the previous support level. We don't see any bottom signal over here. There is no bullish reaction at all, but it is quite good to see that we retested this support level at 167. Tesla is incredibly bearish today. Tesla is rejecting yesterday's bullish reaction, which was a very good one. Yesterday we closed above the 21 MA. All right, we broke the 175 resistance level. That's very good. We were looking very good, and right now today we are rejecting this bullish reaction. If we close below yesterday's low over here, we are gonna completely destroy any bullish possibility, and then only a miracle, only a very good bullish reaction could make Tesla recover again. But why is this so problematic? Because by making a top signal right under this resistance area, Tesla is gonna suggest us that it is going to trigger a head and shoulders chart pattern, which is one of the most bearish chart structures ever. Head and shoulders are very frustrating, and they are very strong because we see here a bullish pivot point. All right, it did trigger a bullish pivot point. Now we see in sequence a possible bearish pivot point. That's extremely frustrating, especially for those who bought over here. All right, so this is why head and shoulders are so annoying, because and they work so well most of the time because they are rejecting the previous thesis, regardless if it is bullish when it is a head and shoulders, an ordinary head and shoulders, or bearish when we see an inverted head and shoulders. All right, so this is why head and shoulders are so powerful. This is one of the things that I always like to talk to you guys about, because technical analysis, guys, technical analysis is not about predicting the future. It is about reacting to what we see right now. All right, this is what we know. It is about reacting, not predicting. And what's most important of all, we should not try to attach ourselves, trying to memorize patterns, memorize chart structures, etc. Instead of trying to memorize, try to understand what they mean, because technical analysis is all about reading the market psychology. All right, if you understand the meaning behind its movements, you can read charts very well. And if you can understand that we see a bullish reversal chart structure, that's very good, followed by a bearish reversal chart structure rejecting the previous bullish one, then you finally understand what is the meaning of market psychology and technical analysis. And what's more, of course, technical analysis is here to help us to make good risk management, because every time we are wrong, we should lose a little bit of money. Every time we are right, we are gonna try to make the most money possible. We're gonna to make much more than we lost. This is how risk management works, and this is why technical analysis is an incredible tool for us to understand and to trade in this market. Oh, and by the way, this reminds me, if you are still not a subscriber in this channel, consider subscribing, because I'm here every single day keeping you guys updated on what's going on in this market. Now, stocks are clearly bearish today, as we can see here in this heat map. Few stocks are going up, right? We see NVDA, we see Meta, even Amazon, which is down 0.24%. Amazon is still making a bullish reaction today. I know it is going down, but it is making a bullish reaction today. So we see a few stocks going up, while the broad market is having a very, very difficult time right now. But if you ask me, there is still hope for a reversal, for a bullish reversal, for a bullish continuation chart structure, as long as we stay above $512 on SPY, and of course above $435 on QQQ. All right, these are our most important support levels, and it is precisely in times like this that we should be extra careful, because in times like this usually we see many very good opportunities all over the place, but if they don't get triggered, if the market frustrates any possibility of a bullish reaction, then we should be extremely careful and maybe even think about changing our strategy. And this is what I will possibly do on our Telegram channel. I will promptly communicate to our members, but so far, apparently, the situation is still under control. So let's see how the market is going to behave this week. This week is going to be decisive, all right? It's going to be extremely decisive, because on the weekly chart, we see a possible top signal on the weekly chart on SPY. If we see this top signal getting materialized, well, a sharper correction maybe to the 21 EMA on the weekly chart below the $500 would be totally plausible and even acceptable in this scenario. So let's see what's going on. I'm gonna keep you guys updated, so consider subscribing. Thank you very much for your audience, my dear friends. See you guys tomorrow. Stay safe. Bye bye.